How can you invest your way to $100,000? Because the biggest concern that a lot of people have is, well, I have this money. It took me a long time to put aside this $10,000. It took a lot of work to put aside this $10,000. I don't want to lose it. And if I put this money in the stock market tomorrow, what happens if the stock market crashes? So what can I do now to invest this money with the least risk possible, to continue to see that growth, to get to the $100,000 through my investments in also the fastest way possible? See, it's kind of a difficult answer to answer here, but the way that you can do this is by understanding, number one, how do most people lose money in the markets, and then number two, not do that thing. Because the reason why most people end up losing money in the markets is because, number one, they don't know what to buy, and number two, they don't know when to buy it. So what people end up doing is they try to find the next Amazon, the next Tesla, the next Nvidia, and what they do is they buy it when they hear everybody talking about it on Reddit or the internet. But when you're buying things based off of what you're hearing on the news or what you're hearing on the internet, you've already missed that trend. And this is where now I want you to take a step back a little bit and understand that real wealth, especially if you're not going to be devoting a lot of time and energy and research, is not going to be through trying to find the next hot stock. It's just by investing your money in the markets. Because if you take a look at the stock market over the last 100 years, what you'll see is that the stock market has gone through booms and busts. But despite the booms and busts, the stock market is higher today than what it was 5 years ago, 10 years ago, 20 years ago, 50 years ago. And this is where, if you can just invest your money into the markets, you can lower some of that risk, because now you're not investing your money in one company. Because now if you invest your money into the next Bed Bath & Beyond or into the next Sears, you're investing your way into bankruptcy, which is not what you want to do. And number two is you can make this more passive. I'll give you a couple examples. I'm not telling you what to invest in, I'm just giving a few examples. So there is an ETF out there called VTI. This gives you exposure to the total stock market. It's created by a fund manager called Vanguard, one of the largest fund managers out there. This is called an ETF, and if you invest in this ticker symbol, VTI, pretty much every brokerage will allow you to invest in this. You're essentially investing into the total stock market, into all the stocks out there that trade on the United States stock market. So now you're just getting exposure to all the companies that are publicly traded. Another option is you can invest in a fund like SPY. SPY is created by a fund manager called Spider, SPDR. This is a fund that gives you exposure to the S&P 500. That means it's a group of the 500 largest companies on the stock market. If you're investing into the total stock market, you're investing into the biggest 500 companies in the stock market. And now, what you're doing is you're just investing your money into the broader market, and now you're going to let the market do its thing. Now, there's a couple ways to go by doing this. You could take all $10,000, throw it all in there today. You could take the $10,000, throw it all in there today, and then invest $1,000 a month. You could take part of the $10,000, throw it in there today, and just keep throwing more money into these funds every single month. That way you're doing this thing called dollar cost averaging, DCA, because nobody knows what the stock market is going to be doing next week, next month, or next year. The stock market goes up and it goes down. The mistake that so many people make is that when it goes down, instead of buying, they're selling. And when it goes up, instead of selling, they're buying. And so this is where, now when you have this type of passive investing strategy, I want you to remember this acronym, CPA. This is how you win. CPA in this context is not your person who's doing your taxes. It's a consistent, passive, and automatic investing strategy. What that means is now you want this to be consistent, whether it's every week, every 2 weeks, or every month. It's going to keep passively being invested, and this is going to happen automatically. And what I mean by automatically is you don't turn this off when the market's down. You don't turn it on when the markets are up. You just let it do its thing, whether the market's up, whether the market's down, whether the market's sideways. You CPA. You let this do its thing no matter what. There's a lot of brokerages out there that allow you to do this, where every week or every 2 weeks or every month, money is automatically pulled out of your checking account and it's invested into your funds, whether it's index funds, mutual funds, ETFs. I'm not going to go into the differences between these three on this video. I have other videos on my channel where I've already broken those things down. But the whole idea here is, instead of you trying to find the next hot stock, you're just putting your money into the markets and you're trying to get the average returns. That way you can lower the risk and make it more passive on your side. Now, when you want to grow to that $10,000, you got to remember that getting the initial traction going is the most difficult part, because getting a 10% return on the $10,000 is a $1,000 growth. Not a lot of money, but a 10% return on $100,000 is a $10,000 return. And a 10% return on $1 million is $100,000. So you can start to see that the more money you invest, the faster you can see more dollar returns. I mean, if you had $1 million today and you put it into the markets and you could see a 10% return, you've already made the $100,000 in just 1 year by getting a 10% return. But now what you're trying to do is you're trying to actively grow it, and this is where it takes time, but also the more dollars that you invest, the faster you can see more dollars enter your account as markets grow. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.